Hello everyone, it's Lebahang here. I'm back with a continuation of the previous video, which was a Euro USD forecast. I believe that the audio is going to be much better this time, and I'm basically breaking down why I took this Euro USD trade, okay, which was based off of a sell stop liquidity run. But you know, as I showed you on the triple screen, we use multiple time frames, meaning from the weekly, we use the daily, and the execution charts are 1 hour so that we get the full picture. So it was based on the sell stop liquidity run of the low, the weekly swing low that you see there. So that was liquidity that was engineered prior or above a true mitigation block, which I explained why I'm calling it a true mitigation block. I am not renaming anything that the ICT has taught, but it's just I'm naming it true mitigation block because I'm explaining it the way the ICT used to explain it in his ICT origins tutorials, you know, the original market maker series, etc. So on the daily chart, we see our draw on liquidity, which is that sell side imbalance, buy side inefficiency. And we have a bullish order block that we've since traded off of. And so since we have our draw like that, I am anticipating the state of delivery to be on buy side and algorithmic order flow to be bullish right up until we trade into that big figure. Okay, so going back to what we were anticipating in the previous video, I did anticipate, remember when I was saying that bullish order block should be traded back into, okay, and yeah, I anticipated that bullish order block to be traded back into, and liquidity would be engineered, which was something that I spoke about in the previous video. So that is what occurred, and we had a gap opening on Monday with price trading up like that. Okay. I would like to assume that price did actually trade into that bullish order block. Just because we're not seeing the data over there does not mean that we didn't actually trade into it. In my eyes, I feel like that was some form of efficient delivery, and we did actually trade into it. Excuse me. So now, looking at Gbpusd and how we traded yesterday, we see that there was a bearish order block, but then that bearish order block got violated to the upside. So I would like to treat that as a mitigation block. I would honestly like to treat that as a mitigation block, and would like to see price tomorrow from the opening price, the true opening price according to the true day concept which the ITC has taught us, you know. So I would like to see price from this consolidation of the Asian session trade down from out of it, and then start trading higher. Obviously trading within that violated bearish order block, which will turn into a bullish mitigation block. Okay. And now I'd like us to have a look at the Gbpusd. So, looking at the Gbpusd, looking at the Gbpusd, we see that I've labeled that as engineering liquidity. So I'm seeing that low as a low that is going to be violated or traded towards to neutralize its liquidity so that GBP can start moving upwards. That bullish order block that I'm highlighting there is a bullish order block that is confluencing on the daily. So what I'm seeing as a confluence is that violated bearish order block, which is a true mitigation block, and that true mitigation block was basically printed on two key levels. So the opening and the low of that order block is printed on upon key levels, which is also where a buy side imbalance, sell side inefficiency fits there. Well, is going to be filled, and there's that daily bullish order block confluence that I'm speaking about, that down candle prior to the move up.